Welcome to AML classes. What is tipping off? Tipping off, in the context of anti-money laundering, refers to the unauthorized disclosure or warning given to a potential money launderer or criminal that they are being investigated or that their suspicious transactions have been reported to the authorities. It is considered a criminal offense in many jurisdictions and is intended to prevent individuals from taking steps to avoid detection or further commit money laundering or other illicit activities. Tipping off is prohibited in AML regulations because it undermines the effectiveness of investigations and compromises the ability of authorities to uncover and prevent money laundering and terrorist financing activities. If individuals are alerted or warned about ongoing investigations, which could enable them to take actions to evade detection or destroy evidence. The main purpose of AML laws and regulations is to maintain the integrity of the financial system and deter illicit activities, and tipping off can obstruct those objectives. Examples of tipping off can include informing a customer about a suspicious activity report, SAR, filed against them, revealing ongoing investigations, or disclosing details about the nature of the suspicions to the subject of the investigation. The exact laws and penalties associated with tipping off can vary across jurisdictions, so it is important to consult the specific AML regulations applicable in your country or region for more detailed information. If an individual or entity is found guilty of tipping off, they may face legal consequences, including fines, penalties, or even criminal prosecution, depending on the jurisdiction and the severity of the offense. It is crucial for reporting entities to understand and comply with the laws and regulations related to tipping off in their respective jurisdictions to uphold the effectiveness of AML measures. Thanks for watching.